Hello and welcome to this Xillion Masterclass. Today we will cover Cloudflare, which is also known for its ticker symbol NET, as in internet, NET. The Xillion Masterclass is twice a week, Tuesday and Thursday. We actually take in either one economic concept or a topic in finance, or typically we look at a high growth, smaller company, which may not be a well-known name at this time, but has a high growth potential over the next 5 to 10 years. And don't forget to tune in every Tuesday and Thursday at 3 p.m. Pacific time, 6 p.m. Eastern time. Do not forget to log in. And if you miss any of these masterclasses, you can always go to our YouTube channel, search for us, Xillion, Xillion, and you can find us very easily on YouTube or on Google, or you can go to our website, xillionapp.com/masterclass, and all the previous episodes of Xillion Masterclass are available there. Real quick, what is Xillion? We are a financial platform that helps you achieve financial independence in 10 years or less. That's our promise to you. When you come to Xillion, we help you optimize your 401k, your investments, your real estate, all of that, help you make great financial decisions so that you can reduce the financial stress in your life and become financially independent within 10 years. Actually, with Xillion, you can see a path to financial independence within the first month that we are with us. And we offer all this for a very low fee of only $20 a month. But we also offer you financial advice through competent human financial advisors, and that is available to you at only $79 a month subscription fee. So check us out, xillionapp.com. Okay, with that, and I am Gagan Sandhu. I'm the co-founder and CEO of Xillion, and I've been investing in the public markets for around 20 years. I became financially independent in my early 40s, and now I help others become financially independent by building the platform Xillion. Also, as a way of qualification, I have an engineering degree and master's degree in engineering. And then I also went to business school at University of Chicago to hone my skills in finance and other areas. Okay, so with that, through my critical eye, let's jump in and look at Cloudflare. Let me share my screen here. Here we go. This is our Xillion website. Please do check us out. You will see a lot of products, how to optimize 401k, real estate. We have our proprietary money score that you ought to know. You ought to know what your money score is if you know what your credit score is. We have tools to help you plan your retirement and financial independence. We have tools to explore investments, reduce debt, manage expenses, you name it. Everything you need in your financial life, we have tools for that. And one of those tools is, we call it Analyze product. And if you go to Analyze and you can search, in this case, we are searching Cloudflare. And if you search for Cloudflare, here it is, and boom, you are at this page. So we will go into quite a bit of depth with Cloudflare. One thing we're going to do is actually first talk a little bit about what Cloudflare is, what it does, and then we'll go into the very specific details about whether it's a good stock to own for the next 5, maybe 10 years. So real quick, Cloudflare is a platform. It started in 2009 by two nerds and one of their partners in crime. We'll go into a little more detail later on as well. Actually, since we are on that topic. So it was started in 2009 by Matthew Prince, Michelle, and Lee Holloway. And Matthew and Lee Holloway, they had worked together on one of the first email spam fighting technologies. They started a company called Unspam Technologies. They built a technology called Honeypot. And that technology, that was right after Congress had passed a bill to reduce the spam, email spam. The unsubscribe option and all those things came out. And they started tracking the IP addresses from where emails were getting generated, and started creating a database of that. And they knew where the troublemakers were, and they were able to keep track of that. And that was the honeypot, and that kind of became morphed into the very first products of Unspam and then Cloudflare. And so they started in 2009 with that concept, and it slowly grew from there. They started with helping reduce DDoS attacks, then started offering content delivery, then started offering edge computing, as it's called, like cloud computing, web application firewall, you name it. They just kept adding more products. If you go to their website, you can see, they're kind of, their ticker symbol is net. They think of themselves as the beating heart of internet, and they push about 20% of internet traffic. I have worked at a competitor of Cloudflare, Akamai Technologies, much older company, started in the late 90s, out of MIT. And that company, that used to, when I was there, Akamai used to push about 25, maybe even 30% of internet traffic. And for a company like Cloudflare to come up much later in 2009 and push 20% of internet traffic today is pretty good, really good. It's a testament to the quality of the product, quality of the people. And you can see all their products listed here, different products for security, application security, network security, developers, helping developers build, deploy services. Also, they have some consumer services. I don't think this is as big, but their model, because their model is freemium, they do give away certain things. So this is, how Cloudflare started, what their products are. And what is specifically important here is, and I have mentioned it here, by the way, I give the founding team 5 out of 5 stars. This is as good as it gets. Why? 2 reasons. One, these, Matthew and Lee, they were nerds, just nerding out about spam, about DDoS, and all those things. And they kind of made it as a hobby project, and that hobby project became this big company. That's always a great sign. And Michelle and Matthew were in business school together. And the second most important thing is they're still with the company, all 3 of them. Matthew is still the CEO, Michelle is the COO and president, and Lee is still one of the lead engineers there. So you can imagine, 3 people who start the company, they're still there 15 years later. A very, very good sign. And they don't have to work for money. They're working because their heart is still in it. They still are excited about this problem, about the company, about doing something good. So that's always great. Product diversity, you can see it's actually, they keep launching new products. I've given 4 stars, not 5, because it's still an internet company, right? They tried to launch the workers and other products, hasn't done as well. But to their credit, they keep trying. That's a sign of a great company. They keep launching new products. Every 3 to 6 months, you'll see some innovative product come up from their stable. And that's what Cloudflare does as well. Their pricing is really, really straightforward and simple. And that's why I think it's 4.5 stars. If you look at it, you can get started for free. If you're a developer, they show you that, hey, you can get started. Actually, it's right here. You can get started for free, and for any product, very transparent pricing. There are no gimmicks, no games. And if you're a small startup, you start here and you just build from that. And that's what they do. And when I was at Akamai, this was one of the things that we noticed was, especially the smaller, nimbler startups, they don't want to talk to a salesperson. It's a 2-3-person company, maybe 5-person company. They just they're playing around. They want something like this. Hey, it shouldn't cost me much, or maybe, okay, $7, fine, I'm in. And they want to just build, prototype. And when they get big enough, if they get big enough, when they get big enough, they want to talk to sales. And that's where Akamai kind of didn't do as much early on. You had to talk to sales. You had to get the contract signed. But Cloudflare, from very early days, hey, get started for free. And when you scale, we scale with you. You make more money, we make more money with you. So always a very good model to have, especially in software. Okay, so that's the kind of the baseline for Cloudflare. Great product, great leadership, and excellent pricing. Now let's look at how the stock has done. And again, all this information is available within Xillion. You do have to create an account. Create an account, go to xillionapp.com, and then go to Analyze, and you can search for Cloudflare. If you look at 3 months, stock has taken a beating since the last earnings call. 6 months, barely, it has trended down. 1 year, barely made a difference. 3 years, you can see the COVID bump and the COVID slump, post-COVID slump, and then slow recovery, but still kind of not going anywhere, right? The way I see it is, if you liked Cloudflare 3-4 years ago and you still like the business, you can buy Cloudflare today at the prices from 3 years ago. So that's one way to look at it. Since IPO, they have done well. They're up, I think they IPO'd at $15 or $17 and then popped right after. So they have done well since IPO, but still, we'll discuss if long term it makes sense. 24 billion cap. It's still a small company. It's not in the big leagues in the tech sector, which tends to grow pretty fast. Stock performance is, it's negative in a year, and negative overall for the last 3 years. Tech overall has, if you take out the Nvidias and the Facebooks, Microsoft, and maybe Netflix, if you take those 4 stocks out, everything else, tech hasn't gone up too much. And especially since the last Salesforce earnings release and a few other earnings releases, the whole sector was barely recovering from COVID the downturn post-COVID, and then it went back into the slump. So tech overall hasn't done in terms of stock performance too well. And then let's look at the valuation. Price to sales ratio is 17. This is high. It is higher than 97% of its competitors. It is a bit concerning. It's not a cheap stock to own. So I want to be very clear about that. Definitely not a cheap stock to own. It's not as high as it was in COVID, but at the same time, a good company, if you look at, let's say, today, let's say CRM, which is Salesforce, their price to sales ratio is, let's see here, 6.37, right? So you can see this is much higher than, so Cloudflare is much, much higher than, say, Salesforce and Microsoft, Apple, those, but not, and if you look at NVIDIA, it's probably, NVIDIA is, I think, even higher, but NVIDIA's growth is crazy, so not exactly. See, NVIDIA is 37, but keep this in mind, right? So 16.7, let's say 17 is the price to sales ratio. But now let's look at the next thing, growth. This is a very high growth company. Okay, last 5 years it has grown about 47% per year. Last quarter it has grown 30% per year. So a 30% growth rate is unbelievably good in this economy, especially when everything is kind of stalling, especially tech. Tech is kind of not able to find its way out of this, this low period. But 30% growth for a company that is initially giving away its product for free, it's really good. It's really, really good. Just imagine once the economy is back in the top gear, and tech is back and spending is back again. This has the potential to accelerate. But even otherwise, 30% is very, very healthy growth. It's higher than 85% of its peers, and its peers are tech. So it does, being in the top, probably 10th, 85th, 90th percentile, you can command a premium. Profitability, high gross margin, very typical of software. High gross margin, but the company is investing in building new products, building better marketing engine, hiring more salespeople. So it's very typical. High growth companies typically don't focus on having a net margin. Okay, let's look at a couple other things. This is a chart I really look pretty deeply into this and the quarterly. So annual revenue, anytime you see a revenue that is consistently growing and by healthy percentages. So if you look at it ever since it started being a decent sized business, they have grown 40+% and again, COVID wasn't a big bump for them. They were already growing at a pretty healthy rate. COVID gave a little bit of bump, but nothing crazy. And then 2022, a little bit of slowness. So the growth declined a little bit. 2023, it declined a decent bit. But this doesn't tell the whole picture, right? So let's take a look at the quarterly, which tells a much deeper picture. So here's a much detailed picture, actually. So look at this. This is the quarterly revenue. And you can see this is a company that has basically no seasonality whatsoever, consistently quarter-over-quarter growth. So it used to be in the 40-50 range, 40 to 50% range, in the 2019, 2020, 2021. Then it decelerated a little bit in 2022, and now it's settled in the 30s range. Now, if you look at it, this is, again, not a decline. Now it's kind of settled in the 30s. Any company in today's market growing at 30% is a very healthy pace of growth. And I definitely want to emphasize that this is a very healthy growth rate, which has stabilized at around 30% for a company that launches a new product every 3 to 6 months. Right? And very healthy growth. This makes me very, very bullish on the company. Trailing 12 months, again, consistent growth. And this is also a good chart to look at, because sometimes one quarter to next quarter, they might have, certain companies sign big contracts in certain quarters. But if you look at rolling 4 quarters, so rolling 12 months, it's a consistent growth story ever since they actually started making 100 million. So that's something to look at. We have looked at price to sales ratio, and as I said, you can today buy Cloudflare at similar price to sales ratio as pre-COVID. So something to think about, because definitely, the numbers have shifted a little bit, but it is as attractive as it was before COVID. If you want to invest, if you have been thinking about investing, margins, again, the loss is shrinking. Every company is trying to become more profitable, so I wouldn't be surprised if they actually turn it around within the next couple of years. So profitability by end of 2025 or beginning of 2026 wouldn't be totally unexpected. And operating income, again, they can easily take care of that. Gross profit, and you can see the quarterly gross profit. They are at a $1 billion run rate in gross profit. That's a very healthy company right there. So based on all this, and we've already discussed the leadership, product, and pricing. Based on all this, what would I do with my money? And full disclosure, I do not own any Cloudflare stocks until now, but I'm seriously thinking about buying. I think this company, with the leadership that is in place and hasn't really indicated they want to leave, and the product that we as a company also use, and it's really, really good. It works like almost magic. I have very high faith in this company actually doing really well in the long run. And in my case, I think the long run is 7+ years, and 5 minimum. Like, if we look at next 5 to 10 years, I can totally imagine this company continuing to do really great work and continuing to increase its revenue, and always a portion of the revenue is a profit. With a business that's 75% gross profit, they can at any time ratchet it up a little bit and make lots of profit. They're already cash flow positive. So overall, I think for the next 5 to 7 years, this is a good stock to own. This is not investment advice. I'm just sharing my thoughts for information purposes only. But I would be looking at investing in this stock in the next 3-ish months or so, especially given the trajectory lately. The market is not showing much love. So when everybody is sour on a stock, and the company's underlying business is good, that's not a bad time to actually jump in and buy that stock. I've done it multiple times. It doesn't work out all the time, but anytime the company was a high growth company and the market punished it for one bad quarter, or revising its estimates down a little bit, but the company's growth rate continued at that, the stock bounces back in the long term. That's just how it works, because there's more revenue, more profit, more cash flow. And when you do the math for how much a stock is going to be valued, as I've said in the past, the real, I would say, two big things that really matter is, one, how much profit this company will make, whether you measure it in cash flow or you measure it in EBITDA or net profit. And second is how long it can grow faster than the inflation rate. Inflation rate is about 2%. And most financial models, this is where Amazons and Microsofts and Apples of the world have really shown a difference. Most financial analysts, in their models, right, when they build the models about a company, about the stock price of a company, they believe that 5 years from today, the company will stop growing at high percentages and it will only grow at 2, 3, 4%, maybe 7 years. But if you look at Amazon, it started in 96, 97, and ever since until now, it is still growing. Even today, it's growing at 15% per year, right? No, like any analyst sitting in, say, in 2000, they would have been like, oh yeah, by 2005, Amazon will grow at 2% per year. Amazon kept growing at 20+%, 30+% during those years. So this is the difference between okay companies and great companies. Great companies find a way to grow. And the way they do it is by launching more products. This is why, and the companies that are able to launch great products are the ones that have great people. So based on these three things, a great leadership that is in place is able to hire other great people who build great products across all markets, and then they keep pricing simple and they keep adding more customers, keep making their actual, every dollar that comes in becomes more profitable, and they're able to get more dollars from the market. They're able to take market share from their competitors. So based on that, highly recommend that you look at Cloudflare and think about looking at it deeply and possibly adding it in your portfolio and analyzing it. If you have any questions, feel free to reach out to me. Wherever you're consuming this media, you can DM me on that, Twitter, LinkedIn, Instagram, wherever, or you can also reach out to me directly on our website if you become a customer. So looking forward to hearing your questions and getting your feedback. Do you like these masterclasses? What do you like about it? What do you not like about it? How can we improve it for you? Would love to hear your thoughts. So thank you so much. Don't forget to join again every Tuesday and Thursday at 3 p.m. So twice a week, 3 p.m. Pacific time, 6 p.m. Eastern time. Don't forget to join us, and I look forward to seeing you next time in this Xillion Masterclass. Thank you so much.